Okay. Last week we saw the first calculation aspect of the bills of exchange, which has to do with recording when sales is being made from the day books and also sending to their individual ledgers. Now today we want to see another aspect of bill of exchange, and this has to do with the different ways um, the seller or the drawer handles the bill. Now, remember, I told you that there are three ways in which the drawer, which is the maker of the bill, can handle a bill. I said, for instance, I use this illustration. I said, for instance, if this is a drawer and he sold to this person, I said he might decide to wait up until the maturity to receive payment. And if he can't wait, I said he can negotiate it with another person to receive payment. I said if he can't also do that, he can also meet a bank or a finance house to also receive payment. So this is the three ways that a drawer can handle a bill. So that is what we want to see how we can do justice to that to solve it. Okay. Now the question said Chuma. Chuma. So Chuma is the maker of the bill, is the owner of this business. Sold goods worth 900 to Dede. So Dede purchased from Chuma. Okay, please understand the question. On July 1st, 2002. Then they say Chuma prepared a draft bill for 900 on July 3rd, which was accepted by Dede on July 4th. The date of its maturity was August 6th. Okay, so Chuma sold to Dede. He also prepared a bill on July 3rd, but it was accepted by Dede on 4th. So it means it was on 4th that he became the acceptor. Remember, also acceptor is when the drawee accepts the what? A bill. Now they say the date of its maturity, that is the date Dede is expected to pay goods he bought on this day, is what? August 6th. Okay. Now they said show the accounts necessary to record these based on the following conditions. Now I want to prepare this account based on these three conditions. Now the first one, they said the bill was held by the drawer until maturity when the drawee made payment. That is the first one. Chuma did not meet any other person. He waited up until August 6th before he received payment. The second one, the bill was negotiated to Obi by the drawer on July 4th. It means he couldn't wait till August. He went and met Obi to collect money from him so that they will have to refund Obi. While the third one said the bill was discounted with the bank on July 4th, 2002. The discounting charge was 45 naira. So it means that he couldn't wait until maturity. He couldn't discount it to an individual. He went to the bank. So we're going to prepare this using these three. Okay. So we have solution. Okay. So now we are preparing this in the book of the drawer, which is Truma. Any issue? So the recording will be the first one. A. The bill was held by the drawer until maturity. So what it means is that Chuma waited till August 6th before he collected the money. So we're going to start. They say Chuma sold goods worth 900 to Dede. So it means if he sold goods to Dede, Dede received the goods. So like what we did last week. So our entry first straight to the ledger. We go to Dede on July. It says July what? 1st, which is sales worth 900. That was what he sold to Dede. Okay. Now they said Chuma prepared a draft bill for 900 on July 3rd, which was accepted by Dede on July 4th. It means he accepted a bill. So if he accepted it, it becomes a bill receivable. We saw that in the previous. So it means the corresponding entry. So we now have what we call, let me divide this. We now have the bills receivable. So since he prepares a bill and gave to Dede, so Dede accepted it. So on July 4th, it was accepted on July 4th. So July 4th, we have bills receivable, which is how much? 900. Okay. Now the corresponding entry comes to bills receivable account, whereby we have also on July 4th, Dede, which is the same thing as what? 900. So we have successfully shown the sales and the bills that was drafted. Now watch again. It said Chuma sold goods worth 900 to Dede. Now he sold goods to Dede worth 900. Now when he sold the goods, Dede received, which was what debited to him. Now they said on July 3rd, he prepared a bill which was accepted on the 4th. Okay. Now when a bill is received, you debit the bill receivable account and also credit the debtor's account. So it was credited there, bills receivable, and debited to the bills receivable account, showing the double entry. Now the third thing we're going to prepare here now, it said the date of its maturity was August 6th. Remember, the condition we are looking is the first one, when the bill was held by the drawer until maturity. So when it gets to August 6th, payment was made to the bank. It was made to Chuma on August 6th. So we are going to show the entry. So Chuma Bank received the money. So he received from bills here, August 6th. So we can have bills receivable because that's the account that is still open. Bills receivable 900. While the corresponding entry comes here as August 6th, bank 900. So this is closed. So the balance is showing that the money is in Chuma's bank as 900, which is what he sold the goods. Now let me repeat again. Now we want to show these three different conditions. I stated before that a drawer, which is the maker of bill, has three options. The first one, it has to wait till maturity of the bill. That's maturity when they both agree that this is when I will pay. That's the first one. The second one, if he can't wait, I've said that before, probably he has an emergency, he needs money. He can go and meet another individual and say, please give me money. Look at this bill. This person is owing me money. So when he gets the money, that person owing him will have to pay that person he's collecting from. Okay. Why the third situation is if he doesn't see an individual to meet, he can meet a discount house or a finance house or a bank to get the money, but they will charge him. I said that before, that probably if they are owing him 5,000 and he approaches a bank to receive the money before maturity, the bank will not give him the 5,000. They might give him less than, or even if they give him 5,000, they might charge him what we call a discounting charge. So they are giving us a question now that we should show these three conditions. So Well, the first one, when the bill was held by the drawer until maturity, that is, this true man, which is the owner of the goods and the bill, waited till August 6th, which was maturity, to receive money. So the three events here is he sold goods to the debtor. The second one was he prepared a bill. After preparing a bill, the third one is he waited till maturity and collected his money. So the first one, which is he sold goods to Dede. Dede received the goods, which is what? Sales 900. Now the second one, he prepared the bill, which is bill receivable. Now when bill is being prepared, you credit the what? The debtor's account as bill receivable. We did that last week. Why the corresponding entry comes to bill receivable account, showing the double entry principle. Why the third one, he waited till maturity to get the money. Now, since he waited, now when it got to August 6th, Dede now paid it to his account, the bank. Now, since it is coming to his account, it was debited to the bank. Why the corresponding entry comes to bill receivable. So that these two accounts is closed, these two is closed. The money for the sales made is now in his account as bank. So that is the first entry, when the bill was held by the drawer until maturity. And the second one, which is B, is the bill the drawer negotiated. The bill was negotiated to Obi by the drawer. It was negotiated on July 4th. Now, the reason was because the owner of the bill, which is Truma, couldn't wait till August 6th. It's like he needed money. So instead of waiting till that time, he went to meet Obi. Obi, please lend me money. Dede, which is the person he sold goods to, is owing me. So when it gets to August 6th, Dede will no longer pay Truma, but will have to pay to what? To Obi he collected from. So they said we should also show when this same bill was negotiated to Obi by the drawer. Now, the same thing will happen. We'll start afresh again. Truma sold goods worth 900. So we also have Dede. It was sold to Dede. So we have on July 1st, it was sold to Dede, which is sales 900. Now the second thing that happened is he prepared a bill, the same way we did the first one. He prepared a bill. We have bills receivable. And you prepare the bill, you credit the debtor's account, which is on July 4th. July 4th, we have bills receivable 900. The corresponding entry comes here, the same thing, July 4th from Dede, what is what? 900. Now, the one we are treating now said the bill was negotiated to be by the drawer. What is this? By the drawer on July 4th. It means the same date he prepared this bill, he couldn't wait till August 6th, which is maturity. So he had to meet Obi. So it means Obi paid the money. So it means they received from Obi. So it will not be bank receiving, they received from Obi, which is July 4th, which is what? 900. And the corresponding entry also comes here, July 4th, will be offset this debt as 900. Morning. Okay, so this is the second transaction. Now, instead of it being paid on the August 6th, which is maturity, by Dede, it was paid by Obi 900. So bank received from Obi that same July 4th, which is what? 900. So this is the second one where it was negotiated to the drawer. Now the third one is the bill was discounted with the bank on July 4th. Now, in this situation now, he couldn't wait till maturity. He did not negotiate with an individual, which is Obi. He went to the bank to receive the money, to approach the bank and tell them, please, I need this amount of money. This person is indebted to me. So how do we also record? The same process. The only way it will change is from this side, the same way it did in this. So the same way, for C, we have the bill was discounted with the bank. The bill was discounted with the bank. So we start the same thing from the beginning. Chuma sold goods. So he sold to Dede, which is July 1st. That is sales 900. Dede received the goods. Now the second event that happened, he prepared a bill. So if he prepared a bill, the same way, we have bills receivable. Now we have on July 4th, the bill was prepared. So we have bills receivable 900. The corresponding entry comes here, July 4th also, Dede 900. Now, this is where we are going to effect the third condition. They said the bill was discounted with the bank. It means it is now the bank he approached that paid him. Still on July 4th, not August 6th. The difference between these both is that he waited till maturity before they paid it to the bank. But this one, he couldn't wait. He still went on July 4th, which is when he prepared the bill. Okay? So since he approached the bank also gave to him. Bank paid 900. So he received the money. Yeah. So have on July 4th, bills receivable 900. Now, but this bank paid discounting charge. Discounting charge was 45 naira from his bank. So we still have that same July 4th discounting charge. Because the money is going out, they are deducting a charge from him, which is 45. So the corresponding entry will come to discounting charge account. Discounting charge will have here July 4th. It's coming from bank, 45 now. So with that, we have completed the third condition, which is when it was discounted with the bank. Any question? Ask before we move. Now, all this we have done is in the book of the drawer, which is Truma. All this is Truma, the way he handles his bill. We will also prepare in the book. Good morning, sir. We also prepare in the book of the acceptor, which is Dede. Because since he is doing transaction, he will also prepare his own entries. So all this is in the book of the drawer. So most time they might tell you prepare in the book of the drawer and the acceptor. So this is the different way he handles the bill. Now let me repeat for sake of those just coming. Now we are looking at how to record a transaction that involves three conditions on how a drawer handles a bill. So the first thing is that he sold a goods to his customer. The second, he prepares a bill. which is a bill what receivable. Why the third is that he either waits till maturity or negotiates it to another individual or approaches a bank to receive money. So we are looking at the three conditions on how this can be prepared. So the first one said the bill was held by the drawer until maturity. So it means he waited till August 6th. He did not discount it or negotiated it with another person. So he sold to Dede, Dede received the goods. Now the next thing, he prepared a bill. And once a bill is received, bill receivable is prepared, you credit the debtor's account and debit bill receivable account. Okay, so bill was prepared on July 4th. It was credited, the corresponding entry comes here. Now the third condition is that he waited till maturity. So when he waited till maturity, they paid the money to the bank. So the bank received 900. Corresponding entry comes here. So these accounts are closed while the money for the goods is in the bank. So that's the first condition. The second one is that he couldn't wait till August 6th. He has to negotiate it with Obi on that same date. He prepared the bill. So they said the bill was negotiated to Obi by the drawer. So we have Dede, the same process. He sold goods to him, 900, prepared the bill, credited, corresponding entry comes here. And this is where it changes because he negotiated the bill with another individual. So it is Obi that paid this money, 900, and he paid to the bank. The bank received the money. While the third one is that he negotiated or discounted it with a bank. Okay. The same way he sold to Dede, Dede received the goods. Why? Prepared a bill, credited the debtor's account, corresponding entry comes to the bill receivable. Now, since he is discounting with the bank, it means it is the bank that will pay the money. So the bank is bill receivable, the credit bank, corresponding entry comes here. Now, since it is going to the bank is there to make money. They are not charity organization. So they will have to charge it. The same way if you have an account, you will see maintenance. You will see ATM maintenance. I don't know what they are maintaining. That's the same way they will deduct money. That's the same way they charge him discounting charge because he's receiving the money before maturity. Okay, so they charge him for the 5 naira corresponding concept. So this is the different ways in the book of Chuma, which is the drawer. Now, if we are also preparing in the book of the acceptor, who can tell me who is the acceptor in this situation?
David.
Huh? David. Thank you very much. It is David because he's the one that the bill was sent to. So if we prepare in the book of the acceptor, which is Dede. So Dede is the one now preparing. Now this one now is Chuma. Chuma is the one preparing. That's how we have the name of Dede. Chuma is the one preparing. Now in the book of the acceptor, Dede is now the one preparing the account. So we'll have Chuma. We'll have Chuma. Now, to him now, which is the acceptor, Chuma sold goods to him. He made purchases. So it will be credited on July. The same way we have the first one here, we have sales. In the other way around, in the acceptor, it becomes purchases. 900. Okay. Now for him now, it is not bills receivable that is preparing on behalf of Chuma. It is bills payable. I think we saw that in the previous class also. So bills payable okay. In the same way, the bills payable now we have this on July 4th. So we have this as, yes, as Chuma 900. While the corresponding entry comes here still on July 4th as bills payable 900. Now the last situation is when the money is being paid to the bank. So we have the bank here at August 6th, 900. While corresponding entry comes to the bank August 6th, we have bills payable 900. Now for the acceptor, the different ways Chuma handled the bill is not his concern. His concern is that he bought goods, they bought a bill, he accepted it, and he's to pay August 6th. For the acceptor, he can't pay below August 6th because that is what they agreed in the bill, which is the maturity. So this other process is for Chuma, the same way he handles it. But for Dede, which is the acceptor, he bought goods from Chuma, he received a bill, and he is paying August 6th. So this is in the book of Chuma, and this is in the book of Dede, which is the acceptor. In the book of the acceptor, which is Dede, he will not write his name now, he's the one preparing it. He is preparing it on behalf of somebody he purchased goods from. Look at here now. This Chuma now, this first one is Chuma that is preparing it. He will not write his name. He is the one preparing it. He is preparing it on behalf of his customer he sold to. Who did he sell to? Chuma sold to Chuma. Dede. That is why Dede is prepared here. Why this one in the book of the acceptor? Who is the acceptor? Dede is the acceptor. So we are showing another transaction in the book of the acceptor. Acceptor is Dede. Dede is the person that purchased the goods. He's the one preparing this transaction now. So he bought from Chuma. So his name will not be there. It is Chuma. He's preparing the transaction on behalf of Chuma. While Chuma was preparing this transaction on how he sold to Dede. So that is how. It's the same way if you are selling to a customer, you don't write your name. You write, if they are owing money, it's Chiamaka Jimogwo. Abi? So it is the customer's name that will be there. And also, if you're also buying from your supplier, it is not your name. So the same question. Now let's say in this same situation, they said Dede in example above failed to pay on August 6, 2002, and the bill was noted. The noting charge for 20 naira. Show the account necessary to record this if A, the bill was not discounted or endorsed to another person. B, the bill was discounted with a bank. The discounting charge was 45 naira. Now, if you remember, I think that was the first class we were introducing this. I said, even as a debtor accepted to pay his debt, he might not pay it. I said that there might be a situation whereby he did not pay. It means he dishonored the bill. That is, when it gets to the maturity and he cannot pay, it means the bill was dishonored. Okay? I said what the drawer would do is to get an independent person who will call a notary public. I said that. Notary public, which can be a lawyer or so, to get evidence of the reason why the drawee or the acceptor couldn't pay his bill. Okay, so and also he will also charge for that, which is what we call the noting charge, because he is not there to render charity. So now they said in that question we've seen in the same situation. Now this is the other question now. They said they in the example failed to pay on August 6th. Remember, we said August 6th is the maturity, which he was supposed to pay. But they say when it gets to August 6th, he did not pay, and the bill was noted. It means they got a notary public. He sent the drawer, sent the bill to the person. The person took the bill to Dede and asked, "Oga, why don't you want to pay your bill?" So, and the charge for that, called that noting charge, was 20 naira. Okay? So they said, show the account necessary to record this. If A, the bill was not discounted or endorsed to another person. Now, how do we record a situation whereby the drawee dishonored a bill he couldn't pay? How do we record it? If the bill was not discounted to another person, it means he waited till maturity. The second one, how do we also record if the bill was discounted with the bank? This same thing we did there. If this bill was discounted with the bank, how do we record it when this person couldn't pay? So it's just like the previous example we did, the first and the third. The only one that is not here is the second, where it was discounted to OB. Okay, so how do we record a dishonored bill? If it wasn't discounted to another person, it means he waited till maturity. And also this one, if it was discounted with the bank. So what do? We are going to do, okay. Now, the same way we start solution. Now, this is also in the book of Chuma. Now, the same way, we'll start from the previous example when the goose was sold, right? Okay, now we'll start from the first situation when a goose was sold to David. So if goods was sold on July 1st, the same way we did that, which is sales of 900. Now the next thing is that a bill was prepared, which is still this thing. A bill was prepared, which is bills receivable. Okay, and he accepted to pay on July 4th, which is day 900. Right, corresponding entry comes here as July 4th, bills what? Receivable 900. Now, he has accepted to pay, and the drawer waited till maturity. When it gets to August 6th, like what this example is saying now, he did not pay. Now, this other one, we are treating it in a situation whereby it was negotiated and those persons paid. Now, when it got to this, where after receiving a pay, he couldn't pay. And if he didn't pay, it means the bill was dishonored. So we have a dishonored bill on August 6th. It was on August 6th it was supposed to be paid, but he did not pay. So we have a dishonored bill of this same 900. Why the corresponding entry will come here so that it wouldn't be that here is still open. Dishonored bill as August 6th. Dishonored bill of 900. Now, the next thing is that we said it was noted, and the noting charge was 20 naira. So, we also have a noting charge here. That's August 6th. How much is it? 20 naira. So, we have the noting charge. Corresponding entry comes here as August 6th, day 19. So, 20. 20 no. So it still keep this account open, meaning that this person is still owing this money. So this is how to record when he fails to pay the bill. This is how to record. Let me repeat again. Now, the first one we treated a situation whereby it was he waited till maturity and he paid. But this situation now, they are saying they, an example above, failed to pay. So if he failed to pay, it means it was dishonored. It was dishonored. So how do we record that situation? Now we start. Now it was sold today. He made sales today the 900 and wrote a bill on July 4th, in which the bill will debit the bill receivable account and credit the debtor account. Now, when it gets to August 6th, was when payment was supposed to be made, but he did not honor the bill. So it means it was dishonored. So we credit this 900 and the corresponding entry comes back to the debtor's account to indicate that he is still owing. He is still owing. Then also, like we said, if a bill was dishonored, we have an independent public who we call notary public, and the charge 20 naira was made to that. Okay, so that is the first situation of recording that. So the first one, now this is the first one. A, the bill was, which bill of person? Was not discounted or endorsed to another person. Okay. So we want to see a situation whereby the bill was discounted with a bank. So we have B, the bill was discounted with, the bill was discounted with a bank. Are you there? Yes, sir. Now the bill was discounted with a bank. Now look up. Now I want to see when the bill was discounted with the bank in which the acceptor fails to pay, which is the second one. Now what do we do? How do we record it? The same way. Now he sold to Dede, which is on July 1st, which is sales of what? 900. He wrote a bill, which is bill receivable. Follow me. He wrote a bill, which is bill receivable, and on July 4th, which we have seen previously, today day 900. The corresponding entry comes here as July 4th bills receivable 900. Now look up. Unlike this first one, we said it wasn't endorsed to another person. So he waited till maturity. And it was when he got to maturity that he discovered that they failed to pay. But this one, they said he discounted with the bank. And discounting with the bank, it means he approached the bank. He didn't wait till maturity. So he met the bank just like we did this when we said he discounted with the bank. So he went to the bank on this same date, which is July 4th. So the bank paid to him, which is Truma, which is on July 4th. He received from the bank 900. So bank, we have July 4, bills receivable. Thank you. 900. Which is what we did here. Now, look up. And they said they had a discounting charge. So have
Discounting charge.
extension. 45. Now look up. You know, since Chuma went to meet the bank to receive this money. Yes, extension. Since Chuma went to meet the bank to receive this money on July 4th, they will now have to pay the bank, not what? Chuma. And he will pay, like I said, the same way he will pay on August 6th, not even July 4th. So when he got to August 6th, now this example, they now discovered that he did not pay. It means it was dishonored. So if he didn't pay, so 6th. dishonored,
B.
dishonored bill of 900. Now the corresponding entry will come here showing that day is still owing, and it will be that August 6th.
B.
Dishonored bill of 900. Now the same way we have a notary charge which is August 6th, noting charge. How much is it? 20 naira. Why the noting charge will also come here? Noting charge. How much? 20 naira. So this is how it will appear. Then we'll open a discounting charge, the corresponding entry. Discounting charge. July 4. Thank you.
Bank.
How much is it? 45 naira. So with that, you have completed the accounting process. Now remember, we said the bill was discounted with the bank, and we are looking at the situation whereby it was dishonored. So first, Chuma has received the money. He did not know what's happening. It was when he got to August 6th that the bank is now waiting for Dede to pay. He dishonored the bill. So dishonored bill was credited here. Corresponding entry comes to Dede to indicate that he is still owing. He is still owing. He hasn't paid. So that is how you record that. Remember, all these are in Chuma's book. Chuma's book. That's why we can still have Dede. So we are going to see also how to record in acceptor's book. Okay. Now, like I said, all these are in the book of Chuma. All this recording are in the book of Chuma. Now, I want to see this dishonored bill in the book of the acceptor, which is in the book of Dede. Okay. The same way it will look like this. So we'll have Chuma. Dede bought from Chuma, so it was purchases, which is July 1st, 900. Then a bill was prepared. So in this regard, it becomes bills payable, not receivable. So bills payable was prepared on July 4th. We have Chuma, 900. So corresponding entry comes here, July 4th, bills payable, 900. Now, in the same way, this other situation and condition doesn't affect Dede. It is when August 6th, which is maturity, when he decides to pay. So August 6th, there was a dishonored bill. So instead of paying, a bill was dishonored by August 6th. Dishonored bill, 900. So we have, dishonored bill, 900. So we also have nothing charge. Noting charge is 20 naira. So corresponding entry comes here. Okay. So this is in the book of the acceptor, which is Dede. So that is how we record that. And that will bring us to the end of bills of exchange.